Well, the ICICI Bank numbers are out, and as you can see, it seems to be a better than expected profit, at least for ICICI Bank. So it's around a 24% growth that they have reported in terms of the bottom line. 10,272 crores is where the bottom line for ICICI Bank has come in. This is versus 8,312 odd crores, and better than our expectation of around 9,997 odd crores. Now, in terms of the NII, that too has come in marginally above estimates. So the street was anticipating around a 12.2% growth. It's come in at around a 13.4% growth. 18,679 is where the NII has come in. This compares to around 16,465. The gross NPA has come in lower on a year-on-year basis, on a Q-on-Q basis. So it's coming at around 2.3%. We have the net NPA, which is absolutely flat on a Q-on-Q basis. So the gross NPA, as you can see on your screen, is 28,775. This compares to 29,868 odd crores. So that is a lesser, there's a reduction of around 3.6% in terms of the absolute figure when it comes to the gross NPA. In terms of the net NPA also, I think there was a little bit of a flattish figure. So that should come up for you, and the provisions should come up for you again as well in terms of what ICICI Bank has reported. Provision coverage ratio stands at around 80%. Net interest margins, this is what the street is going to be looking at quite closely, and there is a reduction in the net interest margins. It has come in at around 4.43%, which compares to around 4.5% in the previous quarter. And I think the street is going to factor that in come Tuesday's trading session. Overall, it seems as though the profit is better than expectations. The gross NPA ratios are largely stable and lower, in fact, in terms of the gross NPA, but the net interest margin has come off on a Q-on-Q basis. We have a couple of reactions, but before we get to that, Abhishek, just wanted your first thoughts on it.
Strong set of numbers are coming in from ICICI Bank. Take a look at the deposit growth, 18.75% YOY and about 2.9% sequentially. Loan growth pretty robust at about 18.5% YOY and about 3.9% sequentially. So they have seen improvement in the CD ratio as well on a sequential basis to 86.6% when compared to 85.8% in the previous quarter. Now, asset quality has improved. Motilal Oswal was working with a flat gross NPA ratio of 2.5% versus 2.5%. It's come down to 2.3% when compared to 2.48% in the previous quarter, which means the asset quality of ICICI Bank on a gross NPA ratio basis is perhaps one of the best that you are seeing in last 8-9 years or even more. Actually 36 quarters or even more is the number to be precise. Take a look at their performance. They have beaten our poll with respect to NII by 1.1%. However, profit beat is at 2.75% versus our poll. Provisions have risen sequentially by 80.1%. We need to wait for the details with respect to what is the provision for, given the fact that, AIF related provisions banks have been making, but no taking away from the fact that X of provision operationally, it looks like a strong quarter that has come in from ICICI Bank. We do have Ashutosh Mishra with us, head of research institutional equity at Ashika Stockbroking. Ashutosh, what do you make of the first numbers that have come in?
The numbers looks quite impressive. And the best part is that they are balancing between their credit and deposit growth, which is one of the important talking point at this point of time. And even if you look at the provision numbers, which is relatively higher, roughly approx 625 crores has been done mainly towards the AIF related things. So, which is, we are seeing across the private banks are doing at this point of time. So, on all count, it is good. Only thing is the NIMs. On the NIMs front, we all were knowing that substantial pressure banks are facing, and especially banks with a higher home loan portfolio is seeing some reduction because a lot of repricing pressure is there on the bank at this point of time, and it was an unexpected line on the NIMs front, taking that into the account.
Okay, so that's exactly what I wanted to ask you a little more about, Ashutosh, is the net interest margins, because we, I think, have a Morgan Stanley estimate which was estimating that the margins would probably come in at around 4.37% this quarter. And we all were expecting maybe some amount of net interest margin pressure, but it's come in better than at least what was anticipated. 4.43 as compared to, say, 4.37%. Yes, marginally here and there, but nonetheless, on a larger scale, how would you read the net interest margin pressure?
So in the case of, ICICI Bank, we will see some pressure on the margins continue even on the fourth quarter. And bank has also guided for the same. Like they have seen, when the margin has peaked out the few quarter back, they have clearly indicated
margin
that
pressure,
the margin is not sustainable
sure,
at that level. So what we need to focus is the NI growth. They are delivering very healthy NI growth, and that's a very positive.
So that wouldn't concern you, correct? The margins which have come in at 4.43, you're okay with it. You don't expect it to probably weigh down on the stock.
So we just have to understand that part of the portfolio where the loan gets repriced early and liabilities is now catching up. So it is a normal business cycle where we are going to see some margin compression. Margin will be more stable around the 4% level for the 4 to 4.25% level for the ICICI Bank in the medium to long term, and that will be very healthy for the bank, which is growing at roughly 19% year on year.
Okay, just to add more details from the press release, the slippages are slightly on the higher side. Morgan Stanley was working with a slippage of 5,250 crores. It has come in at 5,714 crore, which is a jump of around 21.9% quarter on quarter. Annualized slippage ratio is at 1.98% for the quarter versus 1.69% in the previous quarter. Take a note. Recoveries and upgrades are pretty strong. So the asset quality improvement is not due to write-off, but recoveries and upgrades are at 5,351 crore when compared to 4,571 crore in the previous quarter, which is a jump of about 17.06% sequentially. If I do a back of the envelope calculation, write-off is at 1,425 crore, which compares to 1,922 crore in the previous quarter. A decline in write-off, better recovery and upgrades have actually aided the asset quality to improve in this quarter. Ashutosh, what do you make of the numbers with respect to movement of gross NPA that I just highlighted?
Yes, you have highlighted very important thing out there, but we just need to see that is there anything unusual into that? I don't find any major part of it. We are going to, especially on the asset quality front, we have no concern, at least at this point of time with ICICI Bank. AIF provisions is there at this point of time across the banks, and that is more of a regulatory side of it. So we just need to little bit get more clarity on that front.
Okay, all right. Well, we have Rahul Malani also joining in to discuss the numbers. Rahul, hi, welcome to the show. ICICI Bank, your broad takeaway in terms of the numbers. In fact, I actually wanted to start with the slippage figure. It's come in at around 5,714 odd crores. They did 4,687 odd crores. The street was anticipating a little lower figure in terms of the slippages. How would you read that?
So overall result is in line with our estimates in terms of NII growth also. We were expecting around NIMs to compress by 15 basis points, but it has reduced by 10 basis points. So overall, in terms of operating profit as well as PAT growth, it is in line with our estimates. However, when you are talking about the slippages, you need to keep in mind that in first quarter and third quarter for the ICICI Bank, the slippages are higher in the agri portfolios. So that has been trade in the past also. So I believe that incremental slippages would have come from the agri Kisan credit card portfolio this quarter.
Credit card portfolio, what is the kind of stress you are reading into unsecured loans that ICICI has given?
So basically, we other than agri, in the overall unsecured portfolio, we do not envisage any incremental risk. But this incremental slippages have come from the agri portfolio. I believe that.
Okay. We do have Kaitav Shah, lead BFSI analyst at Anand Rathi Institutional. Welcome, Kaitav. Your first take on ICICI Bank numbers that have come out with respect to especially the business growth and the asset quality movement?
And I was doing slightly better.
Okay, well, Kaitav, I think we've got you a little bit on a scratchy line, so we'll reconnect with you. But nonetheless, Ashutosh, what would you want to hear from the management when it comes to their portfolio of unsecured lending?
So basically on unsecured part, the two important point is that going forward, the type of action which RBI is taking, what is their strategy? Because they are growing both on the unsecured credit card as well as consumer lending at a very aggressive rate. So how management really see it, what type of impact they see on their capital currently because of this change in the RBI action, and also going forward, is the capital requirement for that segment is going to increase, and how they are going to plan to raise that capital, or whether they will be funding more internally. So we need to understand a little bit more on management view on this part of the unsecured lending. Yes, in my view, unsecured business is very profitable for the ICICI Bank. Little bit increase in the capital will not make a major difference to it. But yes, more clarity from the management front will be required on this.
Ashutosh, one of the trend that ICICI's press release has given is that their BB and below book, which includes both the funded part as well as the non-funded part, that's increased on a sequential basis, while this is on a declining trend for other lenders. In absolute value, it's at 5,853 crore, which compares to 4,789 in the crore in the previous quarter, jump of more than 22%. Although, as a percentage of loans, it doesn't make a material difference, coming in at 0.5% versus 0.43% in the previous quarter. What's your take with respect to this, the BB and below book, or, the loans funded and non-funded, which is under stress, increasing 22%?
So we all are asking so many questions on the bank on the NIMS front. To defend the NIMS partially, surely banks are trying to also go into relatively some higher yielding segment out there. What we need to understand is that is the risk which they are taking is within the parameters which they are defining it or not. And yes, this needs to be a little bit more query on this front. But yes, the pressure on the names which we are seeing, bank across the line is trying to grow business in a little bit more higher yielding segment out there, and probably that may be one of the reasons why the ICICI Bank is trying to grow that portfolio.
Well, Ketav, you're back online. What do you make of the numbers, especially business momentum strong? The slight hiccup that's seen in slippages and, a part of the BB and below book that we call it, that's increased by 22% sequentially. So your prima facie reading on the numbers?
Abhishek, the prima facie is that this seems to be a pretty good set of numbers. Especially given the context that post-HDFC Bank results were kind of building in. And there was low positioning in the banking stock in the large cap space. Overall, our view is that large cap banks should do much better than the other segments within the BFSI space at this point in time. And from the P&L numbers that have come out, prima facie, it looks that ICICI is doing better than what our estimates were.
Okay, well,
Ketav, what I look out for is in the liquidity in the balance sheet that is there in terms of LCR and the CD ratio. I mean, we'll probably watch that out, which will give us more of a trend on the coming quarter NIM than this quarter NIM itself.
What will be the, that's a good point in terms of what you look out for. Well, in terms of commentary, what are the key points that one should keep in mind, Ketav?
So one is, as I said, liquidity on the balance sheet, commentary around what's happening to the cost of deposit. In their own opinion, is this largely the repricing has happened, and are you going to see now cost of deposit, the delta coming off or not? I think these would be the two key parameters.
We have Axis, which is coming out, next week as well, on Monday or Tuesday. I think Tuesday. What would you recommend? What would your read-through be from ICICI Bank, which you could probably extrapolate to Axis?
I'll just have to do a little more digging into the numbers and then perhaps come back to you. Just too early.
Yeah, just one number that I stand to get corrected. The write-off is lower than my earlier calculation. It's at 1,389 crore. I thought the number was around 1,425 crores. So just one small correction over there. They have given in the press release 1,389 crore is the write-off. That compares to 1,922 crore in the previous quarter. Ashutosh, with respect to valuations of these large banks, how do you see ICICI Bank versus the other peers in the segment?
So across the large private sector banks, we are seeing that valuation is reasonable from their historical averages out there. And type of growth which they are delivering it, market is going to recognize the potential which they have. What I'm more positive at this point of time is the business growth which they are delivering. Yes, market is little bit negative on the NIMS front and liquidity front, whether they will able to fund the future loan growth at the same profitability level or not. The concern is genuine, but the way overall things are spanning up, especially on the growth front, the opportunity which they are getting in. Pricing NIMS can slightly come under the pressure, but on the ROA and ROE level, these banks will continue to deliver very good numbers till the time we see any major change in the asset quality trend, and that is not still we are seeing any major trend on asset quality. So we remain very positive on these banks. Valuations are very reasonable. Growth is very strong for these banks. So you can choose across the line, but yes.
Yes, Ashutosh, just to when you were talking about return ratio, I just got to know that they have reported a 2.32% ROA. I mean, above 2% ROA was unheard few years back for the banking sector, especially below 2019-18. Prior to that, 2% ROA was a dream to be achieved, and now you are seeing 2+ kind of an ROA for the banking sector, despite the fact that net interest margin is declining. Over to you, Ekta.
Okay, well, yes, absolutely. Well, maybe we can just get some last thoughts in from our, panel of experts. So, Ashutosh, let's start with you. What is it that one should probably take away from the ICICI Bank numbers, the pros, the cons, and the likely stock reaction just based on this data? Ketav. Ashutosh, you go first.
Yeah, in my view, it will be positive reactions. Like just now, we were discussing about NIMS versus ROA. So on ROA, they are continuing to deliver good numbers, and investors should focus more towards the return, the final return, rather than just on the one part of NIMS. Yes, we need to focus on the NIMS too, but the way overall they are managing the things and the opportunities they have, I think in this calendar year, we are going to see a good return coming from the large private sector banks.
Okay, and Rahul, what about you? Just a quick wrap on it.
We continue to remain positive on bank, and we believe that over the next 2 years, despite the headwinds emerging, it will sustain ROA about 2%.
All right, Ashutosh as well as Ketav, we're going to wrap up on that note. Thanks very much for joining in and giving us your perspective with regards to the ICICI Bank numbers. So overall, it seems as though it was a good set of numbers based on what they've reported. The slippages, yes, are higher than estimates. So maybe that, along with the net interest margin pressure, would be something that would go down as negatives for ICICI Bank. So let's see. I think the commentary from the management would be critical to assess what the stock performance would be like on Tuesday, and it'll probably set the tone for Axis Bank, which is also a corporate lender in the same space, which will be releasing numbers.
Rightly said.
Okay, well, on that note, we also had the persistent numbers which flashed by. So do watch out for that. They have announced a stock split. And those are the numbers which the street will be reacting to on Tuesday. But with that, we're going to wrap up on this coverage for ICICI Bank. Thanks very much for watching, and more news and updates ahead.